Hi, everybody, and welcome back to yet another cracking installment of the Matt Brown Show. This is the Built in New York series where I'm connecting you, my audience around the world, to some incredible founders who are truly changing the world as we know it. With me on the line from New York is an old friend of mine. Actually, we can get into that. He is the CEO of ForwardLane.com. His name is Nathan Stevenson. Nate, welcome to the show.
Thanks, Matt. It's great to be here, and thanks for having me.
I should actually say welcome back again, because the last time we were, for everyone's information, like I went to New York, it was like 7 years ago. The show was like relatively new, what was new, and then we shot an episode like in outside one of your offices there in New York on the streets. I want to do more of that shit. That was awesome.
I think that's a great idea, and from I remember that interview well because it started with something like, well, here you are, you've raised X amount of capital, and you've made it, and guess what? That was quite far from the truth. So,
Yeah, exactly. It seems
yeah.
to me like you're always in a funding raise. And again, another raise now, which by the way is nothing new if you've been following any of the series I've been doing, built in California, New York, etc. Like startups are always in a funding raise, like at some point. Like it's just a thing that seemingly everyone is doing constantly. And we're going to get into what you've learned about funding now, or raising another round now, and with the market being the way that it is and cost of capital being much higher than it was, say, 3 years ago. So Nathan, let's start with the backstory here. So for those of our viewers and listeners around the world who haven't heard of ForwardLane and the great things that you're doing, why don't you give us the backstory and the elevator pitch to ForwardLane and how the company came about?
Sure. So ForwardLane is an AI-powered insights platform for wealth, asset management, and insurance. And what we're really focused on is this big problem, which is that financial advisors and financial intermediaries, takes them a really long time to gather, analyze data for their clients. In fact, it takes almost 50% of their time. And so we built a platform to help solve that problem by bringing together the unstructured and structured data from their CRM platforms, from their portfolios, from the financial plan, and generating insights, not just for one person, but for every person every day, and delivering that into the workflow. So it helps you to find new opportunities for client engagements, helps to reduce the number of clients that you lose, and it provides a much more personalized experience for clients. So that's what ForwardLane does at a high level. It started here in New York in the Credit Suisse private bank, and what happened is that we realized that relationship managers were just not able to get good research to their clients. And the Great Recession arrived, and guess what? A lot of people lost a lot of money. And as a result of that, ForwardLane was started. And it was really around trying to find the best way of getting good information to good clients.
So Nathan, was it a time thing? Like, why were you the one to solve this problem? Like, were you sitting at like an investment bank and going, "Hey, I'm wasting a lot of time trying to crunch a whole bunch of data so that my client portfolio can make investment decisions"? Like, why does this problem a problem that you decided to solve?
Sure. So I think it was, just a combination of the timing and, my background. I have a background in investment banking and quantitative finance. I've also worked in a large exchange. In each type of role I've had, my job has been to synthesize data to try and find insights that are meaningful. And in the hedge fund, it was to find arbitrage opportunities. in the exchange, it was to package up data in ways that could be useful to the financial services community. And I saw this opportunity to combine some of that experience I had and to set out and try and solve this big problem. How can we get better information, better insights to millions of Americans so that they don't have to be in these bad situations again in the future?
Mm-hmm. So, I mean, who is this for then? Is this for like a high net worth individual? Is it for an investment fund? Like, who's the user of this product?
Yeah, so we are we're a B2B enterprise software startup focusing on AI and fintech. And so most of our clients are large financial services firms like Invesco, BNY Mellon, Pojing, and a few kind of mid-sized firms like Sequoia Financial Group, one of the top 50 RIAs in the US. So we're really kind of focused on the bigger platforms where technology like this can be really additive to what they're doing.
So, is this a time saving thing? Like, walk us through like practically what is the problem on the ground. So let's just say that I'm a portfolio manager at an investment bank. Like, what's the issue? Am I spending too much time trying to read financial reports, and as a consequence, is the cost of my to the bank like too high? Like, is it a time saving thing, a cost saving thing? What is it practically? Walk us through maybe one of the use cases for it.
Sure. So a financial advisor today has anywhere from 100 to 200 clients, and on a day-to-day basis, what they have to do is go through all of these different data systems and figure out what is meaningful and what needs to be addressed, and also think of the relationship with the client. What do they need? So typically, in meeting preparation, they will go through a number of different tasks, looking at the portfolio, look at the financial plan, go through over the past meeting notes, try and figure out if there's something that was talked about that hasn't been done yet, or potentially things that were talked about in the past that may have fallen by the wayside. And so there's all of that, and then there's also financial education materials, different life events that can be coming up for either the main account holder, or perhaps it's his wife or her husband and their children. And so there's a lot going on in that process. Now, if you imagine that not every advisor is going to be able to do that for every 100 or 200 odd people in their book of business every day, they can only really do it realistically for a handful of people. So naturally, the richer people with that they're earning more fees off of get more attention, and they get more diligence. And the lower part of their book, people with less money, just don't get that. And so our platform helps to automate that analysis, that human level of analysis, so that more people in the book can get more personalized attention. And really that advisor can really deliver that personalized touch that they can't ordinarily do because they don't have the capacity to do that.
Mm-hmm. Mm-hmm. Great, thanks, man. So how do you guys solve this problem? I mean, and if you can, I'd love for you to talk about your product, because you've been developing this for some time. It's obviously quite a mature offering. There's lots of coverage PR-wise about what you guys are doing, partnerships, which we'll get into. But at a high level, for our audience who doesn't understand, well, when you talk about personalized recommendations, crunching of unstructured data, and continuity of service across a huge portfolio of clients, like, if I have 200 clients, I'm going to give the top 10, like the top 10 of my book, like the most attention, and the rest, well, we'll try and get you when we can. If you're now solving all of that, like the ability to execute across another 190 clients in a personalized, consistent, scalable way, how do you do that? like that's a difficult thing to do.
Yeah, so it really it starts with mimicking what a human would do. So we did a lot of market research with financial advisors and fund wholesalers and insurance agents, and we literally asked them, "Hey, what do you look at when you start your day? When you're going to reach out to a client, like in an ideal scenario, which systems do you go to? What information do you look for? How can we make things easier for you?" And so we first try to understand the human process, and second, then we had to connect these different data types that the advisors went to and looked for. So this meant bringing in news and research, um, bringing in the CRM data from the likes of Salesforce, and then also connecting in the portfolio and the financial plan. So at a minimum, those are the elements that they were looking at. So that, from a technology standpoint, required integrations. It required being able to read text and interpret it like a human would, and then link it back to those portfolios, the numerical data. That's not easy to do. And so we have some patents around that. It's took a huge amount of work, and we actually had to train our natural language processing AI systems on Morningstar and Refinitiv data so that it could understand financial content and also differentiate between different types of entities and where they're relevant. So that was kind of like building the baseline. Then we had to build an engine to help automate the analysis across all of this data. So think of it as firing signals across this kind of wall of data, if you will, every day, and then just sifting out what's given a positive response, and then delivering it into the workflow. And today, financial advisors spend around 90 to 95% of their time in CRM. So we became partners with Salesforce, and we created a Salesforce application which connected to our platform, and that ultimately became our end-to-end platform. So doing the data aggregation, data processing, the signal engine, making it flexible, making it no code so that a regular product owner could use it, and then delivering it into the workflow for the business user. And now what we've done is we've created dashboards in Tableau and also in HTML. So you can now monitor the user base and see what are the key drivers, what are the segments, what types of signals, whether they're growth related or retention related. And we're very excited about our visual signal creator. And this is really a step to try and greatly simplify things by creating a drag and drop interface to create signals and insights. So, that's the whole picture, from really just starting with people and taking it all the way through to insights, and then what you can do with it from there.
Fantastic. So you mentioned, becoming a Salesforce partner, for instance, and these like wealth managers basically sitting in CRM a lot of the time. The other thing, I've been obviously following you for some time now on social, so it's quite great to get you back on the show. But partnership seems to me like something that you've used as a strategic driver of scale for ForwardLane. Not only in the Salesforce space, but specifically, with your other partnerships. the ones that you have here with FLX, for instance. This was a partnership that you put together, or a strategic alliance with FLX and ForwardLane. So FLX using ForwardLane's technology, for instance. So curious to get your view, Nate. Obviously, we love talking about scale on the show, but like to what degree would you say has strategic partnerships actually propelled the scale and growth of ForwardLane?
Great question. We've started working with Gartner quite recently, and it's interesting to see how Gartner thinks about things like growth and recommendations. But we really think that partnership-led growth is a great way of bringing resiliency to a startup. And so what do we mean by that? Well, we've raised $8.5 million in capital to date, and we've built quite a robust platform that can do quite a lot. And but we don't do everything. And some other platforms like Flex Networks, Ryan Moran and Mark Spina over at Flex, they've done a fantastic job of building a platform for up-and-coming asset managers and financial advisors. It's almost a kind of a LinkedIn plus network. It's a community for these types of clients. And off the back of that community, they are providing distribution as a service and other types of insights, capabilities that you just wouldn't be able to get if you were a small fund or an advisor. So think of it as like shelf space. And so they've done a really fantastic job of that. And we've done a good job of building an AI platform that could help their business scale, as well as all of their 200 clients. And so that's where the partnership with Flex comes in, where we are in the process of deploying the ForwardLane platform to Flex. And we've, through that partnership, they can offer the ForwardLane powered AI as their branded product, Flex AI, to all 200 of their clients. And then we make it cost effective for a partner like Flex to start using ForwardLane compared to, if you're a very large firm like Invesco, it would usually take quite a lot of investment. So we make it very easy to do that, and then we share in the revenues from there. So partnerships are definitely the way forward. Joining ecosystems like Microsoft and Salesforce ecosystems is also very important for startups, because you get access to marketing, other types of sales enablements, resources, co-sell opportunities. All of these things together, none of them individually are a silver bullet, and what you put in is what you get out, which means you got to put in a lot of work. However, it does help you in the sales process, and gives you access to more opportunities than you could if you're just doing it yourself.
So I believe, just to maybe double down on that, so I believe you should say no more than you should say yes, because like you define yourself by saying no in many cases, or what you say no to, not what you say yes to. And I think it's an interesting thing, right? Like if you're like, oh yeah, we got a Microsoft, oh my God, what would it mean for our story if we could have like a Microsoft co-sell or a Salesforce, whatever, integration, or like, and I think as visionaries such as yourself, we often get romanced about the new shiny thing that's sitting in our inbox, right? As opposed to just like figuring out what's the right strategic decision or partnership to put in place at the right time. And because we want scale, and it's like, like we just got to grow at all costs, and then suddenly it's like, oh, we're saying yes, and yeah, we'll do that too, and then you got a small team, like, you know what I mean, like you could have like 10 people or 15 people, and it may just not be enough when you're trying to build product, go to market, manage relationships, raise funding, manage your existing investors. It can become like a thing, like you start starving from indigestion, right? and that's a real issue. So I'd love to get your view, Nathan. What have you, like, has there been something that you've said no to that defined, you as a brand or as a business? Could be like choosing a different segment, or maybe saying no to a particular partnership. Like, what have you learned as the CEO of ForwardLane in a high growth economy like New York, and in financial services, about the power of actually saying no to scale?
That's a great question. One of the things that we've made lots of different pivots in the history of ForwardLane. And, I think one of our board members at one point said, hey, you've tried all these different things, maybe you should sell the company now. And my response is, that's the job of a startup. It's the job of any company, really, is to learn and change and innovate and try new things to find that right fit. So one of the things that we had to ultimately say no to, even though I was initially a champion for it, is we partnered with some smaller firms. There were about 5 smaller firms that had around 10 to 15 users. There were still decent sized firms managing about $1 billion in assets each. And we really liked the people that we were working with there. However, what we found is that they weren't necessarily big users of Salesforce, and they didn't really have the scale to take advantage of the solution. And so the actual costs of servicing those clients ended up being not really worth it. So given that we had spent months working on sales and marketing, and the whole product launch really focused on this segment, it was a little bit of a tough call to all of a sudden go back and say to these 5 other clients, we don't think that we can give you what we'd love to give you today. And so, we have to not really fire you, but, maybe we'll come back to you when we've got something that could be, you can use, that has a lower cost of ownership for us, basically. So that was a tough call. And also spending a lot of time going after a category when you realize that 95% of your revenues come from much larger firms. So that's also been tough to see. You put a lot of time and effort into shortening your sales cycle and making something easier to consume, and then you get there and you realize that, like, maybe that's not necessarily the best decision right now. And you go back to what you were doing before. So it's very much a learning. There's no like straight lines. It's
Yeah.
yeah.
Never confuse a short distance. Excuse me. Never confuse a straight line for a short distance. Right.
Yeah. There's a lot around products client fit, which is what something that I've come to learn happens frequently, especially in enterprise startups, where you might get 1 or 2 clients who absolutely love what you're doing. And we do have some amazing clients that love what we're doing. But there's a difference between that and then going out and having your product sell itself. And so product market fits is really quite an elusive thing. Um, so my advice would be start with something simple, very, very simple, and don't build an AI platform.
Oh my god, it's so funny, dude. I think, yeah, it's like take the next 10,000 startups, just add AI. It's like doesn't matter hairdressing, but now powered with computer vision. Yeah, I mean, it's interesting, right? Like literally, I would say probably like 9 out of 10 founders I talk to have some kind of AI, ML, computer vision thing that they're
Yeah,
doing within the space. And it's interesting because it's like, well, is it necessary really? Yes, it is in some cases, but is it really necessary in all cases? You know what I mean? Like, could you have gotten to this most simplest MVP solution without it?
yeah,
And what could that have saved you in money, investment, people, hiring the like? It's just like the train wreck of it's like the idea of like a bowling ball.
yeah,
Like if you hadn't let it go, what pins would you have not knocked over? But equally, you could say that there's a counter argument, right? Well, if we didn't have it, what successes would we have had? If we would we have had the success we've had without it? And I think this idea of like story is so important. It's like if you sit in front of an investor and you go, hey man, like, and they go, what do you do? What problem you solve in run rate? And then they go, well, what's your competitive advantage? And you don't have something like AI or ML. It's like, well, there's another 100 dudes with that capability. Which one am I going to back? You know what I mean?
yes,
So,
exactly.
uh,
Um,
I mean, you said like don't do AI or whatever, but like, what do you? When should you? Use AI, because I'd love to use AI in the Matt Brown show. Can't figure out a use case for it. You know what I mean? Unless it was pulling out the words "great question" from the guests. Like that's the that's like literally the only thing I could think of, because I want to create like a promo reel. So instead of putting like 10 low cost offshore resources on all that content for literally a year, go and find these words to create this one thing, like that for me could be a use case, but I don't know. And I'm sure a lot of founders also don't know. When should you, from your experience, Nate, having been working with this technology for a long time, when should you say yes to AI?
that's a very big question. I think that it comes down to automation. So, when is there a human process that you can identify that you would like to make it go faster, or multiply it out by thousands of times, and that usually relates to similar senses to what a human has. So seeing things. So when are you looking for something? And looking could be looking in pictures or images or scanning something. When are you looking for something that's important to identify? And instead of having people there, you could have a system that scans for that. Or instead of having people look over a lot of different pictures, you could have an AI system that does that. Another example is reading. So it's not possible for a human to read hundreds of thousands of articles and then try and pull out one or two that is specifically relevant for one client. And so in that case, let's try and read what has been interesting to a client based off of things that they've looked at in the past, discussions that have been had with the client, and maybe some indicators around what they're interested in from investment standpoints or things like that. And then let's use that to read other articles all around the internet and match the two, right? For the Matt Brown show, there's a beautiful use case for the Matt Brown show, which
Please
is um,
hit me.
generating content. And so right now, today, you have hundreds of different interviews and podcasts and other articles. So there's a great service, one of many, called Jasper.ai. And Jasper uses the GPT-3 language model to generate content pieces. And so a very simple way in which you could create a massive amount of value is by taking the interviews you have and having content pieces automatically written up. So pulling out different elements, different subjects from those podcasts. You could go back and offer those as a package of articles or content pieces to each one of those businesses.
On a fractional basis.
On a fractional basis, exactly.
Yeah, it's so funny because I was reading this here book. If you dig content, which I know you do, this one here. Wait, where is it? There you go. It's called Snow Leopard. Keep talking about it. Chris Lockhead's book, and yeah, he in his book he was talking about like what's it GPT-3 technology or something like that. Anyway, I think that's what Jasper uses.
Yeah.
So I went and I looked at like AI writer and a few other things. I was like, cool, well, like write me an article on like how to scale your startup, for instance.
Yeah.
And while the technology is good, it's not great. And I think like I think we over-index too much towards technology and we under-index too much or away from actually just thinking.
Yeah.
You know, and so what Chris writes about is like, you know, thinking about thinking is the best kind of thinking, which I couldn't agree with. It's like we're always looking for a shortcut for speed, you know. I think I love your idea though. Like here's your interview, and you know here's some articles and kumbaya. By the way, tried that. Tried that. Guys don't want to pay for articles, dude. Like it's more the thinking they want to pay for. Like the content side itself, it's less valuable, just in my context.
Yeah.
But I do find like we want to create these shortcuts. You know, we want to become an overnight success. And you know, Nate, like it takes 15 years to become an overnight success, right? Yeah. Or like 10 years to make a quick buck. And how old is ForwardLane? Just for context for this next question I have for you.
7 years.
7 years. Okay, cool. And you touched on it. You were like you were like, AI, like struggle, and then partnerships and this and that. And so you've obviously been in the trenches taking grenades for a long time. It's like I always use the analogy, building a startup's like going to war, only there's no bullets involved, but otherwise you feel the same things, life or death, every day.
Absolutely.
You know, and so I'm curious to ask you this, like, what would you say, or maybe let me have some fun with you. I'm going to give you the keys to the Matt Brown Show time machine, right? So I'd love for you to go back to like day one, 7 years ago, and you go back in time and you're sitting across the table from yourself on day one. What advice would you give yourself about building ForwardLane?
Oh, wow. That's a choice question.
It's a lot of information. It's a lot of information. But what bubbles to the surface? What do you think that advice would be?
You know, I think that it's funny because a lot of the things that we learned in the very beginning about make a cupcake first, you know, before you make a cake. We learned that in the very beginning. We learned a lot of things as we went along. Advice-wise, I would say that focusing on one thing and one simple thing and sticking with it until it's perfect is a really great way of doing it. I also think that if you can prove that simple thing works from an economic standpoint, in fact, let me flip that around. Until you can prove that simple thing works from an economic standpoint, end to end, and people are buying it, you shouldn't build it. So that is very contra to what a lot of people think when they're starting to build something. They have a great idea and they're like, oh, wouldn't it be great if we could read business cards and automatically, make it easier so that people could stay in touch with each other more frequently. Well, guess what? Then they go out and they build a whole bunch of technology and use AI and OCR and hire developers and all this kind of stuff, raise capital. But did they actually bother to go and speak to the people that would buy the software to do that and ask them, like, okay, would you buy this or not? And then actually show them what they could buy and get them to actually buy it. That's a whole different story. And so that's can be tough to do when you're building technology, but I think it's essential. And it's certainly what I would do in future is start with unit economics, end to end, test it out, prototype it at extremely low to zero cost, and build from there iteratively. And I would also say, listen to who you think your users will be, because as an entrepreneur, most entrepreneurs listen to themselves, to be honest, and which is in some cases like the right thing to do. There's plenty of examples out there like Steve Jobs and Elon Musk and Jeff Bezos to point to. But the reality of the matter is you've got to get out there somehow. And if you don't sell something, if you don't grow, if you don't provide something useful and that's validated by people around you that are going to buy it, then how good is it? How good is your idea? So
Yeah, exactly. It's an interesting thing, right? It's like, how do you get out the building? And Steve Blank was talking to me about this idea, and David Schronthal. If you haven't listened to that interview with David and Steve, highly suggest you do, because they were literally talking about what you were saying, Nate, around like unit economics. So at a business model level, if I put $1 in here, it spits out $3 on the other side. Like that's what product market fit means.
Yeah.
And I think we sometimes get it wrong. So we go and we raise money too early because we think we have product market fit. And then to your point, the money goes into new features, things like this, which aren't really, going to get the deal over the line. They're nice, but they're like vitamins. They're not headache pills. And so then we're no longer thinking about the unit economics. We're thinking about like the new shiny feature thing that's going to make my product better so that I'll feel better about dropping, $1 million a year just on or maybe even in 12 weeks on like a new roadmap or a new phase of development or what have you. And it's a very, very important point. Have you heard of something called the MOM test?
I vaguely, but tell me more about it. I'd love to hear more about it.
Yeah, man. So basically, this was given to me by a couple of founders I had on the show. I've got it up on the screen for everyone. It's actually a book you should go and, not you, Nate, but everyone listening who's in this, like trying to find the right products for the customer. It's called the MOM test, how to talk to customers and learn if your business is a good idea when everyone is lying to you. And it's a great headline, isn't it? It's like when everyone is lying to you, because it's this whole thing. We've heard it so many times. Like, what if, someone went to Henry Ford and was like, can you make my horse faster? You wouldn't have got the car. Same thing same with Steve Jobs. Like, he didn't exactly go and say, hey, world, would you like the iPhone? Like he built that thing because he reimagined the entire premise altogether. Like, he wasn't about making a faster horse or making a more comfortable saddle. He was like, fuck that, I'm going to make a car. You know what I mean? And it's like and this is the thing. I think we either trying to make things incrementally better, or we're trying to change the way it's done. And so if you're in the business of trying to change the whole thing as it's known, from horse to car, from like dumbass snake on a Nokia phone. Remember those things that you and I are playing around with in London, right? Like bloop,
Yeah.
bloop, bloop, like, like, or do you want to change the entire game from murderer razor to the iPhone? So this idea of eliciting feedback, if you change the context, it changes the relevance, right?
Yeah.
So, but like if you're in the business of a SaaS play trying to make things slightly better, then cool, no worries. Then go and talk to customers and so forth. But then oftentimes I find like we're asking the wrong question, and I find like we're asking questions that are either leading or they're ambiguous, or basically the person on the other end of the line like isn't going to tell you the truth. Like no one's going to tell you suck to your face. You know what I mean?
Yeah.
They'll tell their friends you suck behind their back or behind your back. It's like school playground rules.
Yeah.
So like it's interesting, right? Like would Steve Jobs ask for feedback? Do you know what I mean? Like, isn't it interesting? If you change the context. And I think it's important to know, like, what problem are you really solving here? Like, are you trying to change the entire category of wealth management or podcasting or, I don't know, cancer, T cell stimulus, and responses to cancer? Like, you have to really know what context you're sitting in, because otherwise, like the idea of like the mom test, like opening, like for instance, one of the things they talk about is ask open-ended questions. So get people to talk rather than give you to like definitive yes or no's, because that way
No.
you actually learn around context. And oftentimes, again, the context changes the rules of the game altogether.
Yeah. And so how have you applied the
Oh
mom
yeah,
test,
I got
with
a
what
great.
you're doing?
Yeah, man, exactly. Finally, someone's interviewing me. Um, yeah, man. So so with startups, right? So I've been trying to figure out like what the right way is to position what I do. So it started off with like media platforms and seed platforms and traction platforms, and it was like big heavy lifting content things. And so I ran a whole bunch of discoveries. Probably spoke to like 30 different startup founders, and I was like, hey, man, do you, like I was saying things like, do you want exposure? Is credibility within your networks important to you? Is it important to you to like feel trusted by your prospects or by the markets that you're trying to serve? And invariably you're getting yes, 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 yes. And then to your point, it's like, well, hang on, but how do you act? Yeah, so you validated the problem, but you haven't validated the customer, right? Because if they're not a customer until they're prepared to pay. And I believe I was asking the right questions, but I hadn't figured out. So in other words, I knew the problem was there, I know the need is there, but I hadn't quite figured out like the right way to package or position like the value of what I do. And so now it's fractional chief media officer. So it's like you get the 10x leverage of exposure in the right networks, but you pay 1/10 of the cost, and I gear my fee in. And the moment I got into I put half my fee at risk and all this kind of stuff. Now suddenly it's like, oh shit, like I know I need this, but I've got the right commercial feature, the feature on the product, because obviously I'm selling a service. And so it was horrible there. Like to get to that point was horrible. Like I still believe like that first 90 days of a startup's life, it's hard forever until it dies or you sell it. but like the first 90 days, like that's the hard part, because you don't have a customer, you don't have cash, you don't have a product, you don't know what you're selling, and you just don't know. You're sitting with like literally an ocean of assumptions that you have to validate like it through somewhere. So it's to your point, like you could trust your intuition and try and go media platforms, and maybe I would have struck it lucky and dropped like $50,000 on a deal, but maybe not, and then where would I have been, so to your
Yeah.
point, this process of like just being curious about what the solution could be, I think is a big one. Not just being romanced about my product's got AI, you know what I mean? Like I'm going there, Mr. Customer, and you must come with me. And I think oftentimes if we just keep an open mind to what the solution could be, AI or not, like then suddenly you start to find something of value that you can offer.
Yeah, absolutely. And this is actually giving me great ideas for going back to our current clients and speaking with them. I do think that startups also in general sometimes feel like they don't want to disturb their clients because they've made a sale and now they're providing service. Um, I do think that open communication is actually really important, and it's actually better in some regards to be engaged with your clients and responsive and with
Mm.
them. But I'm certainly gonna uh, take. I've certainly gathered some good thoughts from our discussion. Certainly the mom test and um, really thinking about how we can leverage Matt Brown's services to expand our media.
Well, yeah. Well, you know where I am, dude. But on a serious note, I think I love what you're saying about you should bother your customers, and I think this idea of friction and co-collaboration is really key. Like I mentioned, that's like a principle. I do believe like if you take principles out of conversations and you apply them in your own context, that's the better way than taking advice. Like the lean startup method is the only way to do it. Never pay attention to your intuition, and you must always elicit. You know what I mean? Like sometimes intuition plays a role, but when it comes to the customer is the only truth. And I think what I've learned is if you can structure things in such a way that it feels like they're co-creating the solution with you, or in my case, it's like I discount half my fee and I say, listen, what does success look like to you? If I did one thing in your business in the next 6 months that would change your whole business, what would that thing be? And then I now know what that is. You've co-collaborated with me, and I put my cost against that idea. I didn't come up with that. I co-created the solution with you in conversation, and so I have to bother you, but I'm not really bothering you because it's in everybody's interest to create the best thing for to solve that particular problem. Does that make sense?
Yeah, absolutely, absolutely. I think that uh, kind of putting yourself out there is really important, and this notion of co-creating is with your clients is really, I think, what it comes down to. And I think that there's something that I've learned recently is that there's two interesting ideas. One around permission, um, and what does it mean to get permission from a client um, or from somebody, and also so that relates, I think, a lot to sales and the sales process and marketing. How do you work with that sense of permission and kind of getting on the inside, so to speak? And the second is ownership, and I think that's what you're talking a lot to with the co-creation process. Ownership, a sense of ownership is so important to really everybody in the world. If you think of the success of the NFTs or, and a lot of Web3 concepts, it's all about this notion of one, ownership, and two, permission.
Mm.
Uh, and so weaving those ideas into starting a business, I think is really important. How can you um, how can you play into those factors to
Mm.
help people give their own stamp on what they're doing? They're enabling them to become their creators.
Mm-hmm. So you speaking of finding the right solution, you guys were just in ITC, or you've just been put into the InsurTech Connect program. I'm going to bring it up on screen for everyone. So it's all about insurance, InsurTech Connect. Why did you choose to do this, Nate? Is this like an adjacent market strategy that you're trying to execute on? Is just trying to learn about insurance, finding the right customer, take your technology and map it to an insurance problem? Like, what's the context and like strategy there?
Sure. So there's a an accelerator program or group called Generator, and Generator they have about 160 different accelerators going on all around the world. a number of them in the US, and they so they have one for insurance called OnRamp, and so we joined up. We applied to join that program. We were selected as one of 5 out of about 700 applicants, and our main goal was that with the increase in inflation and impacting so many people's lives in the US, UK, and globally, the pandemic that we've just been through, I don't know if we're fully through it yet, and all this uncertainty with climate change, wars, and things like this, it really means that prior to the pandemic and not even a year ago, people were planning their lives in different ways. And now the vast majority of them will be caught off guard by this inflation and won't really have a good idea as to how to plan or make these adjustments. So right now there's this kind of tailwind in the insurance industry, which is all about helping to forecast like the cost of medical care, to forecast the impacts on income and provide guaranteed incomes later on in life when you're going to live longer. And so there's a gap between wealth management and insurance, where insurance can actually genuinely protect you, your family, your parents, children, yourself, against a whole range of like all these uncertainties. So we wanted to get into the mix, and with one partner, Intergen Data, who specializes on life event data, we wanted to take a kind of big data approach to forecasting what these life events could look like, and applying them on an individualized basis so that one, insurance companies can better meet your needs, but then also as an individual, you really are helping you and your family in like a time of uncertainty. So we see it as win-win. We see the timing as very, very important right now. And so that was why we entered into the program. And the program's been fantastic, one of the best accelerator programs we've been a part of. We had a booth. I got to present on stage at InsurTech Connect in Las Vegas with about 10,000 attendees. And we've had fantastic access to Allianz Life and Securian, both based in Minneapolis. And so it's been a great experience, a great goal with a higher purpose of helping people, cultural exploration, if you will, of exploring the Midwest and cultures and values and what life is like there. And then, Las Vegas.
Yeah, exactly. I mean, I could think of worse things, just you and I are never going to Las Vegas together. That's like a really bad idea for me and for you and for everyone that loves us. So 2 quick questions, Nate, and then we'll wrap up. One, you're now in another raise. So every time I speak to you, you're in a raise, which is quite interesting, even though I might not talk to you for like a year or two. Market's not great. You spoke about cost of capital being higher, more investors being selective, and in general, it's a lot harder. You're obviously about to close your, I don't know which series you're in now, but what's your advice to a founder who's looking to raise capital now with the macroeconomics the way that they look?
I would say don't be attached to the valuation, because at this point in time, valuations are, the market's in a short to medium term dislocation, which for startups will probably move through faster. In the wider economy, there's huge macroeconomic forces at play that came from overstimulation of the money supply during the pandemic, and now central banks trying to play catch up. What does that mean for startups? Well, in any type of recession, in any type of down markets, there's it's always an exciting time to come up with new ideas and new concepts. I would mostly say don't be attached to evaluation and focus on closing the round as soon as you can. And if you can't in the space of 2 to 3 weeks, then don't. Just stop and carry on building a business until you've got more to show.
Say no. Say no.
Say no. I actually have had to say no a few times to raising capital and cut costs and be very, very lean when I would much prefer to have had capital in the bank, and ultimately would have been better for the company. So yeah, I would say right now is not the time to be trying to be a unicorn founder. Just be a founder and make it.
It's like it's an interesting idea, that, right? It's like your self-worth's not directly proportional to the amount of money you raise. You know what I mean? Like, it's like, oh, well, yeah. Like, it's like, well, I'm going to stay screwed like the $40 million offer because I want the 50. Well, but it's still 40, dude. You know what I mean?
Yeah. Well, I mean, in the startup world, things are changing a lot more than that. Like Klarna's valued at 42 billion, and they just raised their latest round at 3. So that is like a massive change in value, and a lot of fintech startups are raising capital at 1/5, 1/7, 1/8 of valuations just a year ago. So does that mean that those companies have all of a sudden just become less valuable? No, it just means that the market right now is in a strange place, and there's over indexing on this kind of downside. I personally think that things will come back in 6 months time from here, 6 to 9 months. But who knows? It's difficult to say. And I think it's really that uncertainty that's really, putting a spanner in the works for everyone.
Yeah, exactly. It's a great advice, by the way. You should write a book.
Maybe I'll get to that.
yeah, exactly. By the way, that's another thing, right? It's like you don't need to write a 50,000 word book anymore. It can just be 80 pages. It's like no one's got time for 50,000 words anymore. Be like crossing the chasm with 10 pictures. Jeffrey Moore.
That's a great idea for a book.
Yeah. Yeah, exactly. Real page turner.
Yeah, exactly.
Cool, Nate. Well, look, let's wrap this up, dude. Like, I always ask visionaries this question, but why do you do what you do? Like, what gets you out of bed in the morning?
I think I've been thinking about this a lot recently, and I've realized that it's the people around me and the conversations I can have and the laugh that we can share, and really the fact that we are free to a certain extent. We're not necessarily part of the corporate beast, and but it's these interactions. It's things like this, these meaningful connections. And being a startup CEO or being a part of a startup gives you way more meaningful connections than any other type of job. So that's what gets me up in the morning.
Mm-hmm. Awesome. Nate, it's been a privilege having you back, dude. So glad to hear you're still in the fight. And by the way, like, a lot of businesses aren't. So having got the scars myself. I just wanted to say, like, I'm really, really proud of you, dude. I think as your friend, first and foremost, like, I think I always think about America, I think about you. And the success that you've had. So congratulations on all of that. And, super excited to see where you guys are going to go in the future.
Likewise. Thanks so much, Matt. And just one piece of advice, don't become the next Joe Rogan.
Dude, like, no, you know me, I don't copy. No way, dude. I'd rather be the next Matt Brown. By the way, I was thinking, one last point to think about is, I've been, this is a weird story. I don't even like hip hop, right? So, me, I'm a record label, DJ guy, blah, blah, electronic dance music. So I started listening to this artist called Juice WRLD, right? So, and I'm listening to the music, and I'm like, damn, this music's actually pretty cool. I'd love to see him live. So I go to like his YouTube video, right? On one of his tracks called, whatever it is. And I'm reading the comments. I'm like, oh shit, he's dead. Like he over. I'm like, I'm not going to see this guy. But the story is that he overdosed from when he was 21.
Wow.
Yeah, but just such an amazing talent, like, and sad. It's a sad thing. Like, I went into like a weird mourning stage. But anyway, like, one of his sayings is, it's like the purpose of life is not to live forever. It's to create something that can live forever. And this podcast, I was like, oh shit, that's what the Matt Brown Show is. You know what I mean? Like, if I got hit by a bus tomorrow, God forbid, or got bitten by a rattlesnake here on the mountain, which does actually happen in Colorado, like the show would actually be around pretty much forever. Like, I don't even know, how would you delete the Matt Brown Show? Like, I don't know how that's possible. It's on too many places. But it's an interesting thing to think about, right? It's like a short-term profit and just all the money in the Silicon Valley narrative, or do I just want to have a great business that I can hold on to for 10, 15, 20 years and sell when I'm ready?
Yeah, absolutely. What is going to be your enduring mark?
I know, right? Nate, thanks for being. We shall see, dude. Thanks, everybody. Cheers.
Awesome. Cheers, Matt.
Bye.